What's up, guys, and welcome to the Fit to Flourish podcast. It's your boy, Mr. Fit to Flourish, and I'm going to get right into the topic for today, which is going to be how to find stocks, how to choose a stock to trade, okay? How to choose a stock to trade. And the first thing I wanted to do is I wanted to show you my list of stocks that I trade, so my basket of stocks. So this is going to be my basket of stocks here. Bitcoin is not a stock, but it's an asset that I follow because Bitcoin kind of tells you the temperature of the market. If Bitcoin is going up, the market is going up. And then you have good stocks, big like mega cap stocks like Nvidia, and then large cap stocks like AMD, SPY, which is the ETF, Amazon, Microsoft, Meta, Coin, Tesla, Netflix, SMCI, which is another chip play, ARM, another chip stock, Snow, Google, TSM, another chip stock, MSTR, which is closely tied to Bitcoin, Apple, and then I have the US 10-year and 2-year treasury to show kind of the direction of the markets as well and get more information on that. And then I also have the QQQs, which is another ETF that follows the largest stocks in the stock market. Now, let's get right into how to choose a stock, okay? So that's the main topic of today. So how to choose stocks. Let's get right into it. So when you're choosing stocks, you want to choose pretty wisely here. So you choose only 2 to 3 stocks really that you follow very closely. Okay. Why would you do that? Well, traders that lose a ton of trades are always joining those discords with thousands of people. They don't follow any one stock. They just trade whatever the people tell them is popping. They get one small gain one day and then they're like, oh, okay, cool. And they keep listening to hundreds of stocks people tell them to trade. They don't know how those stocks usually move, so they don't know when to get in and they don't know when to get out. They just buy and they lose and they buy and they lose and they buy and they lose. It's crazy. It's crazy. But that's not you. That is not you. You focus on 1 to 2 stocks and you keep reaping the benefits. Okay. So it's like having 10 cows, but you know only one of them can be milked and produce milk every day. Okay. Like, would you go around to milk the other ones every day? No, you would only go to the one that's reliable and can give you the milk. Okay. So, pause, but learn everything there is to know about the stock and make a killing. So Bruce Lee said that I do not fear the man that practices 1,000 moves once. I fear the man who practices one kick 1,000 times. Master the stock, master the move, and become dangerous, aka rich. Okay, so choose 2 to 3 stocks. You learn their moves, you learn how they react to news, you learn their daily price movements, their daily price range, learn how they trade in every season. Practice looking at their charts every single day, learn how their options trade, their average volumes, and please do not try to follow 3,000 stocks. Do not do it. And then technical analysis. So technical analysis uses price data and volume data from charts to analyze a stock. So it gives you insight into future price action. So that's a lot of the stuff we talked about earlier, drawing lines, using indicators, charting, and it kind of tells you when to buy these stocks. Okay, so you want to use that when you're choosing stocks. Another thing you can do is use fundamental analysis, which is basically determining the intrinsic or fair value of a stock based on the stock's industry, economics, and profitability. So analyzing a company's financial data to make decisions about participating in the marketplace. So these things tell you when to buy, what to buy. It's pretty good information. So qualitative, fundamental information would be like a qualitative company would be like something with quality, like a well-known company. Quantitative would be like, hey, what's their assets, their liabilities, their revenue, earnings, cash flow, PE ratio. Okay. So to get qualitative information on what stocks to buy, you can kind of look at what brands do you buy. So Nike, AMD chips are in like all these computers. Apple, you probably have an Apple laptop. I'm filming off of one right now. What's the latest trend? What companies have you worked for? What commercials are you seeing? So these are the big companies that are probably making a lot of money if they're able to be putting enough money out there to get themselves in front of your face. Okay. Quantitative data is going to be things like earnings. So earnings quarter over quarter, year over year, net income, operating income, sales growth, 1 year growth, 3 year growth, etc. So the easiest way for beginners to do quantitative analysis would be through Yahoo. Okay, Yahoo Finance. A lot of people don't know about this. I didn't know about this until I started trading. I didn't know Yahoo had a finance page. So Yahoo Finance, you go through to Yahoo Finance, you can kind of see a lot of the news coming out about recent events, and you can always see what the S&P 500, the Dow 30, the NASDAQ, everything is trading at. It's pretty nice. It's actually very nice. And then you can also go to the search, and you can search different companies. Go to the search bar, search different company, go to the financial section of that company, and then you can actually take a look at their total revenue month over month, year over year. So this is actually really nice. The different things to also understand about different stocks is you need to know stock types. So there's common stocks and there's preferred stocks. And I'll just leave these here so that you can kind of take a look and read the description on your own. And then one of the biggest things to understand with stocks is stock types is that there are larger stocks, so big companies, these mega companies. Then you have these mid-cap stocks, small cap stocks, and penny stocks. And I'll also leave this up here so you can see, but large cap, these are big stocks of 10 billion plus market capitalization. Currently, NVIDIA, their market cap is $2.5 trillion. They just reported earnings today. Today is May 22nd, and their market cap is crazy. Okay. And then another thing you want to look at is there's different stocks in terms of like IPO stocks, which are initial public offerings, so brand new stocks that are offered to the public. We have value stocks, and then you have growth stocks. Growth stocks are stocks whose actual value is actually much less than what people are paying for it. Though they do have above average revenues and large growth potential. So this used to be like Tesla back in the day when it was flying for no reason. And then you have value stocks. So these are great stocks, and they're trading below the price that they should be actually trading at, but they have great intrinsic value. So things like Apple, it used to be Microsoft, now it's flying for whatever. But a lot of these companies that have been around for quite a bit of time, they stood the test of time, and they're trading at a pretty fair value. And then volume matters. Okay. So one thing I always say is that volume matters. So typically you want to be looking at stocks with a volume of 1 million or more. And then when you're trading options, you want to look at option contracts with a volume of 500 or more minimum. That's just a rule of thumb. Market capitalization matters as well. So bigger stocks, so blue chip stocks are large, well-established companies, and they've operated for many years. They're sound companies, they're profitable consistently, and they usually pay dividends to their investors. So they're market leaders in their sectors. Their market caps are in the billions. They have a great reputation. And then here are some examples. So Apple, Google, Microsoft, Coca-Cola. And then just on the next video, what we're going to be talking about is volatility. We're going to be talking about beta. So we're going to be talking about the way stocks move, okay, which is very important in terms of investing in stocks and trading stocks. So the more volatile a stock is, you probably want to trade it. And if it's less volatile, you want to invest in it, to leave it there, let it sit over time and gain gradually without having that, being all over the place, having that peace of mind. But thank you for tuning in to Fit to Flourish podcast. If you have any questions, drop it in the comments. Thanks so much. I'm out.